Indices closed flat on Wall Street ahead of key CPI inflation data for the month of March as investors await some clarity over the Fed's rate cut trajectory. Stocks in the Asia Pacific have opened mixed. The GIFT Nifty, however, is suggesting a higher start for the Indian markets. The rally in crude oil prices pauses as they fall for the second day in a row, with Brent crude now below $90 a barrel. Precious metals continue to rally, though. Gold extends its record run, while the silver prices have hit their highest level since June of 2021. Domestic airfares surge on key routes. Flights from Delhi to Mumbai are costlier by 10% in April compared to the month of March. Flights to Bengaluru and Srinagar are also expensive by over 30%. And Tesla's entry into India will be a natural progression for the electric car company, says Elon Musk. The statement comes amidst the reports of a Tesla team arriving in India to scout for locations to set up a manufacturing plant this month. Good morning and welcome to Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormis Fatakia. It's midweek trading and the Asian markets first up. They've gotten off to a slightly mixed start. They were trading with a negative bias at the start of early morning trade, and they have started off despite this flattish handover that has come from Wall Street. The Japanese markets were trading lower. The South Korean markets, though, are shut because of the elections taking place there. There you can see the Taiwanese index is absolutely flat. However, the Hang Seng is trading with a positive bias, almost a % higher on the Hang Seng. So good going there for the Chinese Hong Kong markets, but the rest of the Asia Pacific is largely flat. And flat also were the US markets overnight. They were mixed end to the session, but they were flat. The Dow Jones ended 9 points lower, the S&P 500 fell 7 points, and the tech-heavy Nasdaq was the outperformer as it gained around 50 points courtesy. However, the shares of Nvidia fell 2% after competitor Intel unveiled their latest artificial intelligence chip. Shares of Boeing also fell as the aircraft manufacturer deals with a safety crisis, while regulators investigate claims from a whistleblower about flaws in the company's 787 Dreamliner. On the data front, investors will also be watching out for the all-important March inflation print that is due later this evening. And let's stay with the US markets and listen into some commentary coming in from experts on their expectation from this CPI data, which is expected later today, and the outlook for the US economy.
People are projecting that inflation will stay near the CPI near the 3% number. Whether it comes down or not is a big question mark. No one knows. I don't. But I do think there's a lot of reasons to expect it's going to remain elevated. And if you start with the real economy, as we've already been talking about, the economy is doing relatively well. We just saw the jobs number. We saw the manufacturing index numbers strong, greater than 50%. And we're also seeing the commodity markets pick up. Not only in the United States are we seeing this improvement, which has been our track record, but around the world. So that means there's a lot of demand being, I think, created in this stronger economy.
So what I would do is not over-index on one data point. If you look at the broader picture, that jobs report was actually quite balanced. It suggested that we can see balanced expansion because, of course, labor force participation ticked up again. And we've seen a big expansion in the supply side of the economy. With regard to inflation, we've seen it come down by 2/3. And I anticipate that we'll continue to see steady progress on inflation over coming months. But of course, that's really important for American consumers. So we're going to keep our eye on that. But I anticipate inflation will continue the remarkable progress that it's made.
We see a number of challenges that are ongoing for the economy. So elevated interest rates that are increasingly bite, services momentum that's likely to fade, a less supportive fiscal picture in the U.S. in terms of we got a big boost from fiscal policy last year. We think it's going to go not be as supportive this year. And we're seeing some signs of softness in the data. I don't think CPI settles the debate. I think you're going to end up with core running somewhere around 0.3, still sticky services inflation. So I think it's going to be much of the similar story that we've seen. We think think that there's enough signs of slowing in the economy that the Fed is in a spot where they really want to cut and are probably going to lean on cutting in June regardless, just to get this easing cycle underway.
I am more worried than I was a couple of months ago, or even 6 weeks ago. And there are a couple of things. One is the good news for this year has been that earnings estimates have been going up. Not by a lot, but almost consistently over the course of three months as earnings reports come out. But at the same time, inflation seems to be much more stubborn than people thought it was going to be at the start of the year. So I think tomorrow's numbers are going to be pretty significant in where the market goes next. And to be quite honest, that's where inflation goes for the rest of the year is going to drive the market, not what the Fed does or does not do.
I think there's a camp of, really big optimists and there's a camp of really big bears. And I'm really not in the big bear camp, right? And I've been one of the more optimistic strategists, but I feel like I've cooled my heels a little bit just based on what we're seeing in the data and the numbers. So I think that we've, when we look at our valuation work in terms of where current interest rate assumptions are, inflation assumptions are, the market looks pretty fairly valued. So I think I'd need to see some change there. Maybe a bigger than anticipated moderation in inflation could do it. I think the other thing, I really think we've got to have a little bit of a pullback in the market.
And let's now get to the final update in our global market wrap this morning. A weak handover from European markets coming in there. The French CAC shed over 70 points overnight. The British FTSE also slipped about 9 points. However, it was the German DAX, the region's top underperformer, that closed over 1% lower. The Pan-European Stock 600 index also closed 0.6% lower, led by a fall in defense stocks. European defense stocks fell between 4 to 9%. Remember, the sector saw a record rally fueled by rising military spends following Russia's invasion of Ukraine. A gauge for Europeans' defense and aerospace stocks slumped over 3.7%, logging its sharpest one-day slide in over a year. Shares of British Petroleum rose to their highest level since October after the oil major said that it expected higher upstream production in oil and gas in the first quarter. Now, that's all the wrap we have on our global market action. But how all of these overnight cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in the news, and some important FNO cues going into today's session. First up, Vivek, who will get us all the market cues that we need to watch out for today. Good morning, Vivek. It's a flat handover yet again from Wall Street. What are you picking up this morning?
Good morning. You're absolutely right. Absolutely flat handover as far as Wall Street is concerned. All eyes will be on the CPI data that is expected to come out today. Post-market hours for us. This is the US CPI data that we're talking about. Oil prices, yesterday again softened, and this actually came in for the second consecutive session. So now WTI lower by almost 1.4% yesterday, closing in at close to the $85.2 a barrel mark, and the Brent 2 fell over 1% at $89.4 a barrel mark. But all of the action stayed in the Indian markets. Indian markets yesterday hit yet another record high. But what happened yesterday was that you did see quite a bit of profit booking emerge at the higher levels. So today will be interesting to see, while the GIFT Nifty is indicating a gap up start, whether these gains can actually be sustained. Now, after that, we've been highlighting continuously how the mid-cap and the broader end of the markets have been gaining consecutively for 10, 11, 12 sessions. Yesterday, the mid-cap index saw profit booking after 11 straight sessions of gains. Now, along with that, the other trend that we witnessed in the market was that the Nifty Bank Index was the relative outperformer when you're comparing it to the rest of the index. ICICI Bank held quite firm, and that helped the Nifty Bank close in the green. Metals, the rally over there continued, especially in some of the precious metal stocks. When you're talking about names like Hindalco, names like Hind Copper, these were the stocks that did very well in yesterday's trading session. Advanced decline ratio for the overall market was at 2:3 in favor of the declines. Now today, Asian markets, giving very mixed cues. GIFT Nifty indicating a gap up start, so maybe a start in record open, but we'll have to see whether that particular rally sustains.
That's the bigger question, right? We'll see if this rally, the higher levels, sustain for the Nifty. But now over to Sudarshan, who would list out the stocks that we need to watch out for in today's session. Morning, Sudarshan. What's on your list today?
Morning, Homa. So I'll start with Paytm. FPIs have increased stake by 2%. Q41 domestic mutual funds have raised the stake by more than 1%. Axis Bank newsbreak is confirmed. Bain Capital is sold 3.34 crore shares at the lower band of the offer range, that was 1,071 per share. Lupin has launched first genic version of Oracea or doxycycline capsules in the US, and it's used for treatment of inflammatory lesions of rosacea, that is skin condition. Shivalik Rasayan will be in focus. US FDA has issued 7 observations for the Dahej-based API facility. Paisalo Digital has given business update. Disbursements were up 38% year-on-year and 121% sequentially. AUM was up 38% year-on-year and 9% sequentially. Keep an eye on gold financials, Manappuram and Muthoot Finance. Gold holds record high ahead of US inflation data. International gold prices have risen to 2,370 per ounce. And lastly, keep an eye on oil marketing companies and ONGC. Crude has slipped for second straight day. Brent is back below $90 per barrel.
All right, plenty of stocks to watch out for. Thanks a lot, Sudarshan, for joining in. And lastly, Mangalam is joining in now with cues from the F&O space. Morning, Mangalam, 22,700. 2 attempts, failed both of them. But what's the trend looking like this morning?
The trend is good, no problems about that. But in the middle of that, there are signs of overheating, and thereafter we see profit booking, just the way we saw yesterday as well. The Nifty ended mildly in the red after hitting a record high. The Nifty Bank outperformed the Nifty Midcap Index as well, saw profit taking. There were two reasons why the profit taking happened. Mainly one, because there was the Fin Nifty options expiry. So there were some resistances at higher levels. And at the same time, we had the put call ratio of the Nifty intraday moved to levels closer to 1.4. At one point was close to around 1.39 itself. So maybe as a result of which the market saw sense in cooling down. The key trigger for today will be both the Nifty as well as the Nifty Bank weekly options expiry. And that's because tomorrow is a holiday for us. So both those expiries will play out in the second half of trade today. Ahead of that, the FI has bought nearly 2,500 crores in cash market, rather in the index futures market. And that's a big positive. Why is that? Because not only did they add 20,000 longs and cover 7,300 shorts, for the first time this series, they've actually turned net long, and for the first time in many sessions. So if you just take a look at the FII long exposure, compare that to the contracts as well. 3 days ago it was 43%, and now it's longs have moved to 51%, with net contracts going to plus 4,000 as against minus 35,000 just 3 sessions ago. But ahead of expiry, we have the 22,800 call, which is extremely active, as is the 22,750 call. Both of them, 22,800 would have been some punt buying. 22,750, if the market crosses that 22,795, maybe we could see the markets move higher. At the lower level, 22,620 is an important support. And that compares with yesterday's range itself, 22,768 on the way up for the Nifty and 22,612. For the Nifty Bank, 49,000 seems like a bit of a resistance. I'm just watching out for a lot of stocks. Yesterday, we had pointed out the possibility of Exide and Hind Copper going into F&O ban, and that's exactly what's happened. And also, we have Vodafone Idea and India Cement in F&O ban. So those are a bunch of stocks which will be on our radar.
Important levels and important stocks. Thanks a lot, Mangalam, for joining in with all the F&O updates. But time to slip into a short break now. But before we do that, let's get you some important opinion coming in from veteran emerging markets investor Mark Mobius on his take on the Indian markets, the economy, and what India needs to do to attract global investors. Listen into what he had to say.
You look at the long term, India looks terrific. It's got the right population structure. Now with China slowing down, India is going to be taking up the slack in terms of manufacturing and exports. So India is in a very good position. There's no question about it. I believe that the position of most investors around the world are beginning to change. They've, of course, been burned very badly in China, and they're looking for another place in which to invest. And India seems to be the logical choice. Now, of course, for global investors, they've been making good money in Japan. The US market has done very well. But at the end of the day, India is now beginning to outperform the US market. And it makes sense for people to look at India. Now, of course, there's a problem of size. There needs to be more equity offerings in India, more IPOs, and hopefully more government enterprises being listed in the market because, as you know, India has some very large government enterprises that could be listed. We're seeing, of course, is Modi becoming stronger politically. In other words, it looks like he's going to have a larger, a stronger position in the political structure of the Indian market. And that is very good news for investors because it means that he's going to continue to push for technology in India and the application of technology. That's number one. Number two, he's going to be pushing more for infrastructure. I'm very, very interested in infrastructure. I believe that that would be a very high growth area. The rail sector is very, very interesting. And the airline sector is also interesting.
Back with us here on Power Breakfast on CNBC TV 18. Now, if you're planning to book flight tickets from Delhi to Mumbai or Bengaluru anytime soon, you may have to spend up to 30% extra. As per data by Yatra Online and Ixigo, the cost of a one-way ticket for certain routes has risen sharply when compared to the previous month. Danish Anand is standing by with the details. Danish, what has led to this surge and which routes have been impacted?
Well, the domestic air ticket prices on certain key routes have jumped between 8 to 39% as per the data provided by travel portals Ixigo and Yatra Online. According to Ixigo, spot airfare has increased the most by 39% on the Delhi-Bengaluru route, followed by 30% on the Delhi-Srinagar route, 12% on the Delhi-Mumbai and by 8% on the Mumbai-Delhi route. As per Yatra Online, spot prices have increased between 20 to 25% on Delhi-Goa, Delhi-Kochi, Delhi-Jammu and Delhi-Srinagar routes. According to experts, the rise in air ticket prices is because of the demand and supply dynamics. Moreover, it was already anticipated that by the end of FY24, there would be almost 200 aircraft on ground. Many experts also believe that the rise in air ticket prices is not only because of Vistara reducing almost 10% flights, but also because of the peak summer travel season from April to June. So clearly, there is a lot of demand for air travel, but because of supply constraints, we are seeing an increase in air ticket prices.
Increase in air ticket prices. Thanks a lot, Danish, for joining in. Now, India Inc. CEOs have seen a 40% hike in their average salaries in the last 4 years. This is as per a survey by Deloitte India. The survey also highlights that every second CEO in India has an annual pay package of over 10 crore rupees. The average annual salary of CEOs stands at over 14 crores in 2024. Reema Tendulkar is here with all the details. Reema.
You said it right. CEO salaries are booming in India, and I've compiled some of the key takeaways from the Deloitte India Executive Performance and Rewards Survey, and here they go. The average CEO compensation in 2024 in India stands at 13.8 crore. This is a good 15% jump compared to the prior year, and in the prior year, the jump is fairly meager, 6.25%. The average compensation is also up 40% compared to pre-COVID-19 levels, 2021. 1 out of 2 CEOs in India, that's 50% of them, have an average compensation above 10 crore. This compares with 1 out of 3 CEOs in 2020. 3 out of 4 CEOs, that's 75%, earn more than 5 crore. Also, there are 2 types of CEOs, promoter-driven and professional. Now, promoter-driven salaries have risen much faster. Promoter CEOs are paid an average of 16.7 crore in 2024. The reason is that, professional CEOs change more often compared to a promoter CEO who typically has a longer tenure at the company. Also, compensation is now getting more aligned to performance. Now, for example, for a professional CEO, 50% of his overall pay is variable. It's called pay at risk. For a promoter, that number stands at 47%. Also, moving on, CEOs who earn more than 20 crore, right? That's the bulge bracket. CEOs who earn more than 20 crore have doubled in the last 4 years. Promoter CEOs earning more than 20 crore is about 36% of the overall number surveyed, while professional CEOs earning more than 20 crore account for 17% of the overall number which is surveyed. Now, one of the driving factors for the surge in salaries is also the rising equity prices, because 25% of the overall compensation, the target compensation for professional CEOs, is delivered through long-term incentives, which for most companies is basically paid via ESOPs. So as the share price of the companies that they're leading goes up, the value of that ESOP continues to increase. In fact, more and more companies are opting for this ESOP, paying compensation via ESOPs. So 75% of the companies are using share-based incentive, which compares with 63% in 2020. And lastly, there has also been a fair amount of CEO churn. An analysis of BSE 200 companies, which excludes public firms, has revealed a staggering 45% of them changed their CEOs in the past 5 years. 6 out of every 10 new CEOs were promoted internally, that's within the organization, while the balance 4 were external hires.
Airfares are going up, as are CEO salaries. And thanks a lot, Reema, for all the details. But moving on now, Elon Musk has once again teased about Tesla's potential entry into the Indian markets. While speaking at a forum on the social media platform X, Musk said that Tesla entering India will be the natural progression for the company. These statements come after reports suggested that Tesla is sending a team to India this month to scout for locations to set up a manufacturing plant. According to the Financial Times, the Tesla team will visit Gujarat, Maharashtra and Tamil Nadu for the same. Now let's slip into a short break. We get you cues from the commodities market on the other side. Stay tuned. We'll be right back. Welcome back to Power Breakfast, and as promised, Manisha Gupta is joining in with all the updates from the commodity space this morning. Good morning, Manisha. What are you picking up?
Well, I'm looking at the crude oil prices to begin with, where we are slipping away from 5-month highs. There are ongoing diplomatic talks between Israel and Hamas, and Israel is reducing forces in Gaza. So that is something that the markets are taking the premium off in sense of prices. Also, when you look at the U.S. inventories, well, they are bigger than expected at 3 million barrels in the previous week, and there is elevated OPEC spare capacity, which the markets are looking at, and that's weighing onto the prices. Also, having said that, well, you have Iran threatening military action against Israel, so that premium continues to be in prices. But all eyes on the U.S. inflation data today, and not just crude, the metal markets are also watching out for that. When I talk about metals, the precious metals are still trading at around all-time highs for gold and silver in the Indian markets, and it's a very strong gain that you see in industrial metals. Zinc is trading at a one-year highs. You have LME copper at a 14-month highs. Shanghai copper is trading at an all-time highs. Tin is at a 15-month high. So everywhere that you look, the industrial and the precious metals seem to be doing very well.
And that's showing in stock prices as well, right? Vedanta, Hindustan Zinc, all of them seeing significant moves over the last 1 month. Thanks a lot, Manisha, for all the commodity cues and staying within the commodity space. Let's also listen in to Dan Yegrin, who is the vice chairman of S&P Global, as he discusses the reasons for the recent uptick in crude oil prices. Listen in.
I think it is to a considerable degree. We've seen until the last couple of days, the end of last week, the oil price was up like over 20% from the beginning of the year. And that reflected, call it geopolitical risk, call it money going into commodity markets because of geopolitical risk. And the thing that really spiked things was the attack on the Revolutionary Guards in Syria, the Iranian Revolutionary Guards, the killing of 7 of them, and Iran's threat to retaliate. So that has been on top of everything else. But as you pointed out, we've seen a little bit of an easing because, there's, quote, talk of negotiations again between Hamas and Israel to release the hostages.
And that's all we have on this edition of Power Breakfast from myself and the entire team that put this show together. Thanks a lot for watching. Bazaar Morning Call takes the action forward in midweek trade.